You may not have many choices if you want to retire comfortably, even if it seems very distant, and you are in your 20s or 30s. However, one of the best choices is to start investing soon and have a good life. It is obvious that you need a lot of money, and a great way to achieve this, especially for the working class, is to put their money into investments. It is clear that you can have more money if you invest sooner. Here's a good example. Suppose you choose to invest $500 every month and get an 8% investment return. If you begin at 25 and keep that plan up until you're 60, you will have $2.16 million when you retire. But if you start investing at 40 instead of 25, you would only have $341,000. Sure, this basic example is not very original, and it relies on an investment getting an 8% compound annual return without considering inflation. But as I mentioned, this is not very novel, and I guess you've already heard it many times before. But for most people, this is still the best method to increase your money and make sure you have a good amount to use in your later years. To sum up, by beginning sooner, you're preparing yourself for success. In today's useful advice video, we'll be exploring some of the most valuable assets and investment choices you can make when young. Now, let's start, shall we? First is index funds. Stocks are one of the most profitable investments you can make before 40. Although they may be very risky, the returns are among the best. As you begin your investment journey, you have a lot of time to learn from and correct mistakes. But you should always make wise, planned investments. Stocks have an average return rate of 10%, using the S&P 500 index as the standard. The reality is, not many investments will have such a high return rate. As you grow your index fund portfolio, think about including bonds as well. Although bonds may have the smallest return rate, they are the safest. You need to make sure your portfolio has about 10 to 20% of balanced bonds. This makes your investment more secure. Also, you could change the percentage and adapt it based on the risk level you have. Crypto index funds are a new invention. They have not been fully proven yet, but they look very promising. The current return rates vary from 10 to 15, which is very high. But as the return rate goes up, so do the risks. A big benefit of index funds is that they have low fees. The lower the fees, the more the returns. Another advantage of index funds, besides diversification, is that many index funds are cheap investments. Fees will quickly lower your returns, so you'll want to step away from them as much as possible. As you purchase the index funds, make sure you also check the tax effects. Second, real estate. Real estate is one of the most reliable investments. Real estate is one of the best assets for many reasons. Firstly, there's usually a shortage of housing, and real estate assets usually increase in value. The first step in real estate investing is by buying your own house. Having a residential property lowers your costs, such as rent. Once you have your own house, you can explore developing other business properties. These could be multifamily homes, condos, offices, and other properties. But if you can't invest directly in the real estate market, there are other choices available. There are many crowdfunding platforms where you can invest as low as $500. The money invested will then be pooled together into real estate properties along with other investors' money. These investments are called REITs, or real estate investment trusts. Third is education. Research shows that your 20s are the ideal time to learn. Your brain is more receptive to new information in your 20s and early 30s. This means that it might be the perfect time to pursue another degree. Education is valuable, as it can prepare you for professional achievement. But you should know that not every kind of education or learning is valuable. Be cautious, because some learning might be just a hobby and not something you can make money from. If you want to spend on education, begin by searching for careers that you are familiar with and that can lead to success. This might also be a good time to enhance your financial skills. Fourth is startup business. Put your money in a new business when you are young. Why? With a business, the profits are limitless. You can make as much as you want with an infinite ROI. Another thing you should do in your 20s is to fund a new business. The potential for huge ROI is amazing, even if it is not the next big thing. Funding a business when young can give you some amazing returns. You don't have to create the business yourself. You can support other people's businesses and get a share of the business. For instance, you could be a backer, and this is a good choice if you trust the founder. Your money can be a convertible note, which means it can become a loan if a certain condition is met. Another option is to use crowdfunding. There are many crowdfunding platforms with amazing startups that have a lot of potential. Before you put your money in a company, make sure you learn about the founder thoroughly and know the reason behind the company. Pick companies that have a compelling story and are supported by founders who have some kind of education, experience, or training in the business field. Another option is to partner with a venture capital fund. You can get certified as an investor and become a venture capitalist. However, these funds have a minimum amount of money you need to invest and have strict requirements. Fifth is Treasury bills. Treasury bills are essential investments for any investor at any age. The best time to purchase Treasury bills often is when you are young. Treasury bills are short-term, government-backed debt securities issued to fund spending and regulate the money supply. Treasury bills have 3 durations: 90 days, 182 days, and 364 days. No matter what, you have bills to pay, such as tuition, rent, or even professional tests. You can simply put the money you have available into Treasury bills and withdraw when the bills are due. This is based on the finance idea of assets and liability matching, which means buying an asset to pay for a future expense. Treasury bills have no risk at all, so your profits are clean, unlike other investment choices. Also, the profits are quite good, so you should invest in them. Sixth is growth stocks and dividend stocks. It is obvious that you can take more chances when you are young because you have more time to make up for any losses. That is why putting some of your money in stocks is a great way to invest in a venture that has a lot of risk, but also a lot of potential. Growth stocks are just stocks that are likely to increase in value much faster than the rest of the market. These stocks produce more steady and lasting profits and income in their competitors. Dividend stocks, in contrast, are often stocks of firms that are solid and established financially, which means the stock values are more stable than growth stocks. Dividend stocks are good to have in your portfolio when you are young. They give you chances to make money regularly for a long time, as long as the firms keep doing well. Seventh is exchange-traded funds. Next, we will examine ETFs, which are very close to the index funds we've discussed before. ETFs are collections of securities with different assets, such as stocks, bonds, and gold, making them alike to index funds. They act like stocks, meaning investors can purchase and sell parts on a market. They are useful tools for investing because they are flexible. They can invest in wide market indices like the S&P 500 or in industries such as technology or health, and even in smaller groups such as social media or robotics. Some ETFs are the Schwab US Large Cap ETF, Global X Robotics and Artificial Intelligence ETF, and iShares Global Clean Energy ETF. Eighth is commodities. A commodity is an economic product, usually a material that can be easily replaced by another. That means the market considers different examples of the product as the same or almost the same, no matter who made them. There are many ways to invest in this. The first is to buy different amounts of real raw materials, such as metal bars. Investors can also invest by using futures contracts or products that are traded on an exchange called ETPs that follow a specific commodity index directly. These are very risky and complicated investments that are usually only for expert investors. A different way to invest in commodities is by using mutual funds that put money in businesses related to commodities. For instance, an oil and gas fund would have stocks for companies that do energy search, process, store, and deliver. The benefits of commodity investing are variety in the portfolio, possible profit, and a potential protection against inflation. Also, Commodities have done the best during inflation times, making them one of the best things to own. Ninth is annuities. An annuity is an agreement between you and an insurer, where the insurer agrees to pay you regularly, either now or later. You purchase an annuity with one lump sum or multiple installments, known as premiums. Some annuity contracts help you save for retirement. Others convert your savings into regular income after retirement, and some do both. If you use an annuity to save money and the insurer postpones your payments to the future, you have a deferred annuity. Conversely, if you use an annuity to generate income after retirement and your payments begin immediately, you have an immediate annuity. Annuities are usually classified into two main types, fixed and variable. There is also a mixed type called an indexed annuity, which is also known as an equity indexed annuity or a fixed index annuity. Annuities are often products that investors think about when they prepare for retirement, so it is beneficial to know them. They are also frequently advertised as tax-deferred saving products. However, annuities have various costs and charges, such as withdrawal fees, death and expense risk fees, and management fees. Annuities can also have high commissions, up to 7% or more. And lastly, we have cryptocurrencies and initial coin offerings. Cryptocurrencies and ICOs have only attracted attention from the traditional mainstream investors lately. However, with ICO fundings raising billions of dollars and over 1,000 different cryptocurrencies in existence, these fast-evolving markets are enticing for investors. These complex investment products are hard for most individual investors to understand and assess their risks, but what we know is that they have very high returns. The returns could vary from 12% to 200%. Some ICOs have done exceptionally well. For example, the OTA had a return on investment of 13,000 times, which means if you put in $1 when it was launched, you would have earned $13,000. And with that, we conclude today's video. Did we miss anything? Comment your best money-making methods below, and we might feature it on our next video. Remember to subscribe to The Wealthy Way and turn on notifications to stay up to date with our latest uploads.